Welcome to Nebraska Farmcast, a production of the Center for Agricultural Profitability at the University of Nebraska-Lincoln. I'm Ryan Evans. With continued high percentages of heifers in total cattle on feed in the U.S., indications are that the breeding herd could be smaller in 2023 and 2024. Because heifer calves are often discounted compared to steers, large price differences between the two could provide incentives for heifers to be retained in the coming years. For more on these heifer price discounts this year and what it could mean for herd size and makeup as well as the beef industry overall, I am joined now by Elliott Dennis, Assistant Professor and Livestock Economist in the Department of Agricultural Economics here at UNL. Hey again, Elliott, thanks for joining me.
Yep, thanks for having me, Ryan.
And you've got this new article up about heifer discounts this year on our website at cap.unl.edu. So what does the latest cattle on feed data reveal about the number of heifers on feed, and then why is that significant for the next couple of years?
Yeah, it really shows that there's historically large numbers on heifers that are on feed. And really when we look at this, the number of heifers on feed through a cattle cycle, what we see is that when prices are really high, we tend to see a lot of those heifers, the number of heifers go down because people are trying to sell feeder cattle. And then as prices start to decline, those number of heifers on feed really increase. And so right now we've been in a period where there's been a lot of prices that have been really low. And so that percentage of heifers on feed has, risen to about, anywhere between 42 and 45% of all of the cattle on feed are heifers. And normally when we're at the peak of prices, that's normally in around 30 to 35%. And so a considerable amount, and ultimately this means that we don't have breeding stock going into, or a reduced amount of breeding stock going into 2023 and definitely into 2024.
So what does the data for Nebraska tell you about the heifer-steer price difference?
Yeah, so one of the things that we did in the paper was to look at what is historical price or heifer discounts to steers. How does this vary both across years and across the times of the year, so January or February, and then how does this vary across weight class? And really what, would refer you to the paper, but really we see kind of differences in those discounts across both time and space, and but there's really is no month that's more risky to sell those animals. That price discount varies, but we calculate this measure of risk, and ultimately there's not real one month that's more risky than others to sell heifers in.
And can you go into more detail maybe about the heifer-steer price difference this year compared to historical differences and why these are significant?
Yeah, so when we look at what historically steer heifers have that price discount, what we see is that this year it's actually quite a bit larger. In fact, most of the months in 2022 have been larger than the 5-year average. At both lighter weights, 5-6 weights, and also at heavier weights, 7-8 weights. And really this has been somewhat surprising because when we look at the data of heifers on feed, we would think that with this large discount, that number would actually come down. And I think it just goes to point that the ongoing drought and just larger producer concerns about profitability have been really driving a lot of the heifers to go on to feed rather than really responding to the mechanism to retain animals for rebuilding.
Are you seeing any other trends that stand out for some weight classes of animals compared to others?
Yeah, well, just that the lighter weights tend to have larger discounts in nominal terms relative to heavier weights. So, for instance, like the 5-6 weight steer heifer discount in 2022 is about $20 per hundredweight, and if we go down to a 7-8 weight, this past year in January is about 12 pounds. So that just really kind of demonstrates the price weight slide, which is we tend to pay more dollars per pound at lighter weights than we do at heavier weights.
So what might these heifer discounts and the wider price ranges mean for producers, feedlots, for the market in the next year or two?
Yeah, so really there's one real strong indicator in the short run, so about 3 to 4 months, that we can think about what the heifer price discount is going to be. And really that's video auctions. Video auctions are cattle that are already sold for future delivery in October, November, December. And then we can look at what we've historically observed and what we would think would probably be the prices going in, and compare that to what the video is actually showing. And what we see is that the video is actually saying that that price discount should actually be a little bit less. And so we should actually see those prices to narrow a little bit, at least in the short term.
All right, that is Dr. Elliott Dennis, Assistant Professor, Livestock Economist, here with the Center for Ag Profitability in the Department of Agricultural Economics at the University of Nebraska-Lincoln. Again, you can find his new article on what we've been discussing here in this episode on heifer discounts and what that means on our website at cap.unl.edu. Thanks, Elliott, for the time.
Yep, thanks for having me, Ryan.
Nebraska Farmcast is a production of the Center for Agricultural Profitability at the University of Nebraska-Lincoln. For the latest research-based information and education resources to manage your farm or ranch operation, visit our website at cap.unl.edu. That's cap.unl.edu.